Welcome back. Let's put the spotlight on the recent consultation paper that has been floated by the market regulator SEBI on the new norms which could be proposed by the market regulator on the disclosure norms by the listed companies relating to the clarifications and verifications of the market rumors. This could have an impact on the M&A deals, insider trading, as well as price discovery for capital market transactions. Let's take it straight across to the expert joining in to give us more understanding on what impact it could have and what are the technical details. J.N. Gupta joins us now to give us his view. Mr. Gupta, so good to have you on CNBC-TV18. Now, my first question to you, if this particular consultation paper in its present form really comes into force, what is the impact in your view?
Thank you, Nishan. I say that let us understand what is the objective for this paper, why all this is happening. It is very basically related to the integrity of the market. Now, what happens, integrity of the market, we mean that the price discovery process should be good and there should be no asymmetry of information. Now, as you have seen in the past, what has been happening, there would be something cooking in a company and few people will be getting wind of it. And then one day it will appear in the newspaper or a media or a YouTube channel or anywhere else. And those who have watched that YouTube channel will be able to trade or take a decision on that basis. So the idea is to have a systemic analysis and ensure that asymmetry of information is as far as possible avoided. Now, you have seen right from last so many years that there something appears in the newspaper or something comes in the TV channel and the stock exchanges write to the company, although the company would be working on that, but they will say as on date, there is nothing like this, some of this thing. Now, the problem is that how to get out of it. And this is a very, very challenging issue. Regulator understands it, industry understands it, media understands it, but those media people who are not regulated, who are not in the limelight, like millions of YouTube channel or millions of social media platforms, we do not know. So the idea is to consult the public at large or to consult the stakeholders and see what is to be done. Now, this consultation paper is output of the industry standard forum, which has suggested all these changes. Although, if you recall, earlier there was a policy where the SEBI had said that all the market rumors have to be verified, blah, blah, but then was put on hold. This matter went to the industry standing forum. They have given this paper. So, objective is to make it in a manner where it doesn't hurt the company, but it doesn't hurt the investors as well.
All right, in its present form, Mr. Gupta, help us understand that if it is implemented, this particular, proposal, what will be the changes and the impact on M&A and insider trading norms? And also to focus on one important aspect that, the cornerstone of any merger and acquisition or any deal is also in the classified information and the secrecy of the strategy. How can that be preserved if you have to verify and come out clean on every aspect of query that comes to the market?
I think, Nisha, all these questions can be answered by just one big deal that happened in India. And that was merger of HDFC Bank and HDFC. And all of us and all the media, they not even had a wind of it till it was announced. So issue is that there is something wrong somewhere where the secret deals are also out in the open before they are done. In case of HDFC, there was nothing, neither print media had any issue, nor digital media.
But Mr. Gupta, I understand about the secrecy. There was no buzz in the market. Nobody reported it. But that was something that was expected for a very long time. It's only the timing that could not be captured by media, to your point. But on the price discovery mechanism, how could this be an impact? And I want to also understand what changes will be required if this has to be implemented to the norms.
So I said, when it is implemented, if you have seen that they have said very clearly that what happens when a news comes into the market or rumor is verified, the price always there is an impact on the price. Now, what they have said that they have instituted a mechanism where it will be the undisturbed price prior to the rumor verification. Now, the question there is this it is in theory very good, but the price of any scrip or any share can move because of multiple factors. Now, when on the side by side there is a rumor or there is a news which has impacted the price, but there are other economic factors individual to the company or market wise or the economy wise or the country or maybe globally.
Right.
Now, how do we differentiate between the two would be a big challenge.
Yes.
As far as insider trading norms are concerned, there is not going to be any change. Only one change that consultation paper has said that in that case, the insiders will not be able to take a position that this was already in the public domain.
Yes.
That if they have not confirmed it, they will not be able to take a position on that.
All right, Mr. Gupta. Thanks so much for putting some understanding into a debate, which is a burning debate, especially for deal makers. So we'll keep at it and understand more of it. Thank you so much for joining us. And with that, it's a wrap on this edition of Big Deal. Thanks so much for tuning in.